If you do want to know about what we do, and if you do want to know about the precious metals markets, if you want an insider's look at what we see every day and some things we're seeing that have us a little concerned and raises alarm, then we'll get to that. We'll show you some of that as well. I know some people who are a lot smarter than I am. One of them is a guy named Shane McGuire. He's a good friend of mine. He's been a client of the firm since 2004. And a lot of the information that I have comes from my relationship with him and the work that he's done. So he wrote a book in 2008 called Buy Gold Now, which, if y'all remember where gold was in 2008, it was about to break 800 bucks. A lot of people thought, this is the time, gold's over, you know, it's going to go back down. Well, he wrote a book called Buy Gold Now. Since then, it's doubled in price. So he's very connected. He knows a lot. He wrote Buy Gold Now in 2008. 2 years later, he wrote Hard Money. But the next thing that I need to tell you is his next book is coming out next month, and it's about silver. And we'll get to silver a little bit tonight, but just to hit right on that quickly, silver, in my opinion, is the most underappreciated, overlooked monetary commodity on the face of the planet. And his book will go into great detail on why that is. What we have here for y'all tonight is just, we want to try to put these markets in perspective for you. Obviously, you're here, either you own it, or you're thinking about it, or you just want to learn about it. And in that case, I think you came to the right place. So there's a 5-year gold chart. If you take all the gold that's ever been mined in the world throughout human history, there's about $8 trillion of gold that has ever been extracted from the earth. $8 trillion. Now that sounds like a lot of money, but I think we'll tell you a little bit that it really isn't that much. Of that $8 trillion in Shane's new book, he'll tell you that of that $8 trillion, we expect that maybe 10 to 15% of that actually trades. The other 85% is in bank vaults, it's on cathedrals in Rome, it's in statues, it's at the bottom of the ocean. So there's only about 15% of that $8 trillion at today's prices that trade. Silver, here's the silver chart. 5 years ago it was 20 bucks, went down as low as 10, went as high as 50, and here we are at 30 bucks on silver. Okay? There's less than $1 trillion worth of silver above ground in the world today. So I think a lot of people have a misconception that there's so much more silver than gold. But one thing that I want to establish very on is right now, at today's metrics and today's prices, there's 8 times more gold in nominal or dollar terms than there is in silver. Silver is actually more scarce in dollar terms than gold. One thing I need to say about silver is it's extremely and very highly correlated to the gold price. So if you expect that gold will rise in the next few years, and we'll get to the reasons why gold should rise, then you can expect silver to do the same. Most people don't get this or understand this or haven't grasped it, but silver has actually outperformed gold since all this started back in 2000, 2001. It's made more money as a percentage gain in terms of what gold has done. So here's a good slide I had. Just how much money is $1 billion? Well, here's kind of an interesting thing. If you had a stack of $100 bills about to here, that's $1 million. Okay? If you have a stack of $100 bills as tall as 2 Empire State Buildings on top of one another, that's $1 billion. Now, sounds like a lot. When I first figured that out, I was like, wow, that's a lot of money. $100 bills stacked up, 2 Empire State Buildings next to each other is $1 billion. Keep in mind that since 2008, we've been going into debt every day by $4 billion a day. I imagine most of you people are business people here, or have owned businesses or worked in businesses. Kind of hard to run a business, much less run a country when you're going into debt to that extent. That concerns us somewhat. $1 trillion is where it really gets freaky. $1 trillion, imagine a stack of $100 bills from Austin, Texas to New Orleans. That's $1 trillion. Not end to end, but stacked up. Okay? So the reason I wanted to go over this early was to just lay out for you and build a picture in mind of when we talk about, okay, we go into debt $4 billion every day, or our national deficit broke $16 trillion 6 or 7 months ago, and we're about to go to $17 trillion. That's how fast it's going. These are all things that you need to understand and grasp because, frankly, you know, you hear the word $1 billion thrown around like nothing anymore. That's really not good common sense. So this is a picture here, if you can see it, of the Washington Monument. I don't know how many of y'all have been to see the Washington Monument, but if you take all the gold that's in the world, it wouldn't fill up the bottom third of the Washington Monument. Okay, that's how much physical metal there really is. Okay, this is my favorite slide that I have, and unfortunately, here we are, I'm going to explain it to you. This is a line here of the bailout pledges to date, meaning all the money that we've printed to help bail out banks, bail out corporations, this and that. And what this line is some government programs that have happened over the past century. And if you add up all these government programs, it doesn't even come close to adding up what we've done since, say, 2005 to 2008. And I've got a shocking point. So if you add up the entire NASA program since it started, if you add up the Vietnam War, if you add up the invasion of Iraq, the New Deal, the Korean War, the S&L crisis of the 80s, the race to the moon, the Louisiana Purchase, and the Marshall Plan, and you add all those things up, which are huge government programs, it didn't even add up to half of the bailout pledges to date. Now what's really crazy, guys, this is a slide from 2008 in a presentation I did then. That doesn't count QE1. It doesn't count QE2 or QE3 or QE whatever. So I think when you just put in perspective all these programs we did here and you add them all up and they don't even come close to the amount of money that we created out of thin air over the course of a few years, it's shocking. It's all about the dollar. People ask me all the time, what's gold going to do? What do you think is going to happen with gold? Well, really what they're asking is, what do you think is going to happen with the dollar? Because the fact of the matter is, gold is going to do the opposite of what the dollar does. The reason why, over the past decade, we've seen gold move from 300 to as high as 1,900 per ounce, currently at 1,600 per ounce, is because the value of the US dollar has gone down. Now, 20, 30 years ago, they used to track inflation in a different way. They used to count food prices. They used to count energy prices. They used to count gasoline prices. About 10 years ago, that all changed. So, frankly, you're seeing and reading right now that the inflation rate is very low. But the reason it's low is because those very important factors to us consumers, food and energy, what else do we spend our money on, right? They don't factor that in the equation anymore, which frankly I think is not a good thing. How does that make sense?